All right, it is good to be back. It's been maybe 1 or 2 minutes, huh? And got the good virtual workshop here for technical analysis. My name is Ray Kimbrough. I'll be joined by my great friend, the Scott Durfee, here in a minute. But I just want to say welcome to everybody. There are literally thousands of you guys here. We'll do the best we can on the chats. So a little admin kind of work going on first is Scott and I will be co-teaching this. And I'll be introducing him in a minute. We got Brett Crowther helping us out in the chats and answering some questions as we go. But with literally thousands of you, we'll try to do the best we can of viewing the chats and getting some comments in there best we can. But we got a great day planned of technical analysis, and we'll go through a few other things to help you out as we go through the day. But let's get started. So the first thing we got to do is hit these disclosures. Just know that everything we do here in the workshop today is for educational purposes only. Scott and I will be referencing strategies, we'll be referencing stocks. Please know that anytime we do that, it is for educational purposes, not advice. It's not a hint, hint, wink, wink, that kind of thing. It's purely educational in nature. Also, do know that although we're not going to talk about options in this class, options do come up occasionally in discussion. And just know that options are not suited for all investors, and you know everything you can about options before you get into it. Also, you do have a paperMoney account. When you do trade with paperMoney, please know that successful trading with paperMoney does not constitute that same successful trade in real money, as the market's always changing. And I think we covered them all right there, but you see them in front of you. And just know that we're looking forward to having a great event with you all here tonight or this afternoon. Now then, I do want to bring in my great friend, the one and only Scott Durfee. You can see that he's been doing this for 1 or 2 years. You can follow him on X right there. You see his handle right there. He's been doing this since 2006. He's a regular contributor on the Schwab network, which is brought to us by our Charles Schwab media productions company, and separate but affiliated with us. And he also specializes in teaching the thinkorswim platform, technical analysis, stocks, options. There you have it. And you can see him right there. Hello, Scott Durfee. Say
Hey,
hey.
Ray. Hey, it's so good to be back. Hello to you. Hello to our friends that have been waiting to join us yet again in yet another virtual workshop. I know that when we're out there a lot, people are saying, "Where are you going to do those again?" Well, here we are. We're doing them again. And according to the numbers we're seeing, you're excited. We're excited. Let me introduce my good friend Ray. You already know him. He's jumped in front of all of this, but let me give him a formal introduction, and then let's get this thing rolling, Ray, shall we?
You got it, man.
So, as you can see here, my good friend Ray, he's been with us since 2004. He's done everything, virtual workshops, the live events. He's taught basically every class that we have to teach, the technical analysis, the option strategies. We'll be doing an option strategies again, one of these in the very near future. Watch for that, in fact. A great friend, Ray and I have been doing this together for over 20 years. He knows how to do everything that we're teaching here and do it well. Prior to entering the corporate world, one thing that's really interesting that you should know about Ray, that he served 10 years in the United States Marine Corps as an infantry officer. And when he departed active duty, he actually had attained the rank of major. I'm pretty proud of him for the service to our country, and pretty great guy to be learning from here tonight. Nobody better qualified to teach you the things that he's going to be talking about tonight. Ladies and gentlemen, Ray Kimbrough. Take it
All
away.
right, right back at you as well, man, my friend. So, by the way, we'll be popping in and out, helping each other out. So, Scott's not going anywhere far away. He's being right here the whole time with us, and we'll be rocking and rolling. So, a couple of things I do want to do when we get to class is kind of give you what we're going to be teaching over the next 4 days. So, today is trends, and I'll be covering that. And then Scott will jump in here. He'll do support and resistance. And we'll add a few other things in there as well as we go along. And then as we get in tomorrow's class, candlesticks and technical studies, and we'll start building on what we're doing from day one. And then on Wednesday, price patterns and bounces and breakouts, and how we can use this information to help us, look at potential trades. And then we'll end up on Thursday with entries and exits, orders, and we'll be doing orders all along, but stock orders, and then that risk management. Probably Scott, I don't know about you, but that's probably one of the most important things is risk management. It's that we know, which, how much we're putting into those trades, right? And so that's going to be a big part of the day. So there you go. There's the week outlined as we get through. We would not do not have a class on Friday. We do have other things going on, very important stuff. So we'll get to that in a little bit. But let's go into our next thing. So today is trend, support, and resistance. Now, one of the things that I'd like to do before we get started, because I bet you there's maybe one or two of you all there, and I keep looking over here. If you see me looking over, it's because I got three screens going here and we got stuff to pull in and out. I want to cover a little bit of the stuff that is on the thinkorswim platform because that's what we're going to use. All right, thinkorswim is how we're going to be bringing the live platform stuff to you. And I want to cover a few things on the platform that I think maybe will help you with just getting started and how to work things before we get into the class itself. So let me go up here and hit my the platform. Hopefully you all can see that okay, yeah? And let me move that out of the way. And let me know in the chats. I see it on my screen up there, so we'll keep it going. I think I can see it. Everybody can see okay. All right. So what I got up here in front of us is the charts tab on thinkorswim, and on the left side over here, you see an example of a watch list. Okay, that I have built over many times doing this class with Scott and doing the live workshops out there around the country. And so what I want to do though is give you a few things on this charts tab to help you move along so that you can kind of follow along in the class as we move. Now, once you pull up thinkorswim, now this is a training, if you will, account. Okay, I really don't have $7 million to show you the trade up there. Okay, all right, and so just so you know, and then we're going to use this platform all week long to teach off of. Now, you can see that I have candlesticks on this platform right now. I'm going to close this left sidebar real quick over here. And what that does is it gives you more room on my chart. So there's a little, right here, a little caret midway through this bar right here. And if I click that, it'll close down that left sidebar and give you more space on the chart. Now, this is a 1 year, 1 day chart. You can see it right there. And this is the Dow, 1 year, 1 day chart. And to see that on your chart, you can see in the same top bar up here, you can see that same information right up on top. Okay. Now, a couple of things. How did I get this 1 year, 1 day chart up? Right in the middle of the blue bar, you see the letter D. And if I hover over it, it says time frame setup. If you left click on that, it gives you some time frames. Now, these time frames I custom built. They're not going to be the same ones you have in yours. Okay. And so I just want to show you how you can do this real quick. If you want to customize and put a time frame in there, just hit what it says, customize list. And when you do that, you can add a time frame. And you can see there's different aggregates you can put in here. If you want to do like, let's say a 15 year, and we want to make it a monthly candle or bar, all right, a 15 year month. And if I want to add that over here, I just say add, and you can see it, there it is right there. And then if I want to move this thing up or down, see it's highlighted, I can move it up in the chain so it's in the sequence of time frames. And then I just hit apply, hit OK, and that's how you add a time frame. So then when you want to change your charts up, if I want to do a 6 month, 1 day view, there's a 6 month, 1 day view. If I want to go back to that 1 year, 1 day, there's a 1 year, 1 day, and there you go. So that's how you quickly can change your time frames up and get time frames. And you'll see Scott and I changing time frames. As a matter of fact, we'll talk about time frames on trend here in just a few minutes. But that's how you get that. Now, a lot of people want to know about this space right here to the right of my last bar that came in today. Here's today's date. And how do I get that space right there? A lot of people want to know that because it helps you with putting in stuff. So let's go here real quick and show you how I did that. So if you go to the gear, all right, on this blue bar, all right, when you're in the charts tab, we're in the charts tab right here, okay? In this blue bar, you can see this gear. If I click on that gear, all right, and I go to time access, because we're talking about time. If I click that bar and where it says expansion area, you can see I have it set to 40. You can set it to some preset ones in there. If I want to go a little bit more space, I can hit 50, hit apply, hit OK, and you see it. Now it's got 50 bars. All right. Because it could be a minute chart. It could be a day chart. It could be a week chart. All right. So it's going to give you those bar widths based on whatever your time frame is. Okay. Another way you can do it is if you go down here to the bottom, okay, and they've got the two big double arrows, click on that. It can bring up the same thing, change right expansion setting. And you don't have to use the set ones. You can just highlight and you can just type in this case, 40, like I had it before, hit apply and OK, and then you have it and you're good to go. All right. And that's how you add that stuff in. Now, let's do this real quick. One of the biggest things that I think people have the hardest time is when it comes to drawing on the chart. Now, I'm going to go back to my pointer real quick. Now, one of the things that you can do, you can draw lines on your chart, such as the trend line, just like Scott and I are going to talk about trend, support, and resistance. And for example, this is the Dow. If I wanted to draw the trend of the Dow, which is an uptrend, all I have to do is go to my drawings tool or tab, I should say. Go to drawings tool. And then if I hover over these different symbols, it'll tell you what they are. And here's the trend line. So I'm going to click trend line. And then what I'm going to do now is I'm going to start over here. Now to draw a trend line, when you want to start the line, you click your mouse button one time. Do not hold down the mouse key. Just click where you want to start the trend line. Then drag your mouse, not holding down any of the buttons, just drag the mouse to where you want to end it at. And then you click the left mouse button again. And then you just drew a trend line. That's how you draw a trend line. Now, I know some of you have done this. You wanted to draw a trend line and you went to go click it somewhere and you clicked up here in the ozone area and you're like, oh no, what do I do now? All right. Well, before you click and anchor it somewhere, just hit the escape key and it'll go away. If you should happen to draw a rogue line, just hover over that line with the mouse, right click on it and hit remove drawing. Or some of you have done this. You wanted to start your trend line. You push down your left mouse key to start it and you did that and you zoomed in and now you're going, oh my gosh, what did I just do? Well, you zoomed in, which is a cool tool. You can zoom in. To get back out of that, a couple of ways you can do it. You can go down here to the minus on the little zoom out magnifying glass and just keep clicking that. Or you can just double click anywhere on the chart. All right. Oh, making me out to be a crazy man. All right. Come on. Let's go back to pointer and do it. It's being difficult. There you go. Double click and then it goes out. All right. There's also other things you can do with your drawing tools. There's many drawing tools. There's a known as a price line right here. Now the price line, when you click that one, it only draws vertical lines. So if you want to draw a price line, all right, start it one time and you can move that up and down before you anchor it and then anchor it again. And there it goes. Now you saw how that line goes out to infinity and this trend line stopped. Well, you can make either one of those do either way. By right clicking over the line, you can then edit the properties of the line. And so that for this price line, I can make it right extension on, I can turn it off, I can do left extensions, I can change the color to whatever color I want to do. I could change the width, I could change the style of the line, anything you want, okay? But here's the key. If you want to always draw them the same way, set that way you're drawing it as default. Otherwise, it'll go back to the factory default, okay? So it's up to you. Okay. And then if you want to delete a line, you just go up there on top, hover over it, right click, and you can remove the drawing. Okay. Now, I think I've covered a few things. I want to get into the class. We spent a few minutes, but I think that's helpful for most everybody who's not been using the platform a lot, how to get in there and do those kind of things. But here's the good news. Before I get to my session, I'm going to show you a way you can set up a thinkorswim session one-on-one, all right, with our trade solution expert, and they can help you with setting up your platform if it's new to you, okay? And so that way you're ready to rock and roll. All right, it's available online. I'm trying to see if there's anything that's going on. Yeah, you can download the thinkorswim platform. I can see that Brett, by the way, Brett Crowler, he's back there helping us out on the chat. So thank you, Brett. and he's putting a lot of things in there. And Scott and I will do the same when we're off air, so to speak. All right. So with that, what I want to do now is get into our slide deck. Okay, and let's talk about the class, and then we'll get into some live examples and rock and roll. All right. So Jonathan and Scott 3677 wants to know, how do you do paperMoney? Well, before you log into the platform, there's a little tab at the bottom that says live training or paperMoney. So you click either one of those, and then you put your information in there, your login and your password, and then you have it. Okay. And then it'll tell you up in the left-hand corner of the platform if you're on paperMoney or live trading. All right, so let's go trend and support and resistance. We're talking about trend first. And I must say that I got to tell you this, folks. The goals of the session is going to identify up, down, and sideways trends. All right. Scott's going to come in here, identify support and resistance levels. And then we're going to look at the mindset as we're going. Myself and Scott, we're getting into, why does a technician do what a technician does? Is it the only way? And I can't say that it is. I know some people in the class may be out there to say, technical analysis doesn't work. And maybe for them it doesn't. I don't know. I know that for myself, and speaking for Scott, I think we like to use the technical analysis side of the business, but that's not the only thing we use. So I got to say this. I think it's wise for a trader to get in there and go, you know what? Technical analysis, shows me a lot, helps me a lot, but I want to make sure I'm looking at the right kind of company. And I got to say that's a good thing. All right, that's a smart, wise thing. And one of the things you do with that is you use fundamental analysis. And I think that's probably a wise way to start a lot of stuff. Whoops, sorry about that. I hit my keyboard by accident. Is used fundamental analysis to understand, what it is you might want to trade. Is it a good company? How are their sales? How are they performing? What's their earnings per share? What are all those things that you want to look at on a good company before you get into it? And I think that's a wise thing. All right. But some of you may look at the fundamentals or the fundamentals of the market as a whole, and you go, but it's very bearish. All right. But when you pull a stock up and you see a bullish stock, what are you going to say? It's a bullish stock, so you're going to trade it bearish? Or are you going to trade the stock bullish because that's what the trend's telling you? Or that's what the technicals are telling you? Okay? A technician, they're going to look at the technicals and do what they see. Okay? They're going to trade what they see in the chart. And so with that mindset, that's how we're going to approach these things. Okay? So again, when Scott and I pull a stock up, I'm not saying that you should go trade this, or this is something that you should be doing. All right, with your accounts, it's something to teach you off of, but we're going to be doing a lot of examples, all right, and show you how this may help you as you go forward. All right, so mindset of a technician. You're going to see Scott and I discuss a lot of these as we move along. So let's do this, folks. Let's get into our first one, and let's look at the definition and the direction of trends, okay? So a trend. There's really three kinds of trends, right? There's an uptrend, there's a downtrend, and there's a sideways trend. Now, cool thing is we got some new drawing tools that I'm going to try to draw on these things for you, okay? And so let's do that. We're going to do this. Let me see what color I want to draw. Let's change this color here to yellow. All right, here we go. So on this first chart, what you can see here, you see a lot of blue dot or green dots on this chart. All right. But if you look at this and you were to draw a line from one side here up to the other side, all right, you get an uptrend, all right, sloping up. All right. Now, there's a definition to an uptrend. All right. Now then, some of you have been to our classes before. Can you know that? All right. And so let's look at the definition uptrend. The definition uptrend is you have higher highs and higher lows. Okay. Higher highs and higher lows. So what does that mean? All right, so let me see if I can do this. All right. So right here, you can see that we had a higher high right there in that little dot right there. That dot we came in. So stock went up, made a high, pulled back down right here, made a low. Okay. Then it came back up here, made another high, but now that high right here is higher than that previous high. So that is a higher high. Then when it came back down, the low that it made okay, right there is higher than that previous low. All right. So you have a higher high and a higher low. And you have a series of these. Okay. You have a whole series of these. And that to give you that what's called an uptrend. Okay. So when it comes to an uptrend, does that mean, well, if we only have, one or two of these, one higher high, one higher low, is, are we in an uptrend? The answer is, yeah, we're in an uptrend. But is it a very strong uptrend? Maybe not. Right? But by definition, it is an uptrend. Okay. And so when you go to look at, well, what am I trading? Am I wanting to get on this trade when the stock's going up? Do I want the stock to be in an uptrend? You need to be able to identify, okay, what is that uptrend? And the answer is, yeah. Okay. So we do want to be in an uptrend. To coin one of our good friends, Mr. Ben Watson, he likes talking about getting into the uptrend, like get on a bus, let's go in the right direction. Is it going north? Okay. As opposed to if I want to go north, do I want to get on the southbound bus? No, I don't want to do that. I want to get on the northbound bus. Okay. And so if that's the case, make sure you can identify, and that's why we go through this, is how to do that. Now we're doing this. This is the manual setup. Okay. So we go through this because we want you to be able to look at any chart, be able to look at the price action, and be able to say, okay, yes, what is our direction? Now, downtrend. Okay, a downtrend. And the downtrend, we have, of course, go to the left side here, and we're going to come. Whoop, I got to go back to a drawing tool to stay what I want to do. I don't want to do circles anymore. Here we go. I'm going to come. Well, there we go. All right. So now we got a downtrend coming in. Okay. Lines going from our left to our right. And we have a downward sloping trend. Now then, definition of a downtrend: lower highs and lower lows. So the same type thing you see right here. You got a low that formed. Okay. And then it made a high. And you can see this high is lower than the previous high. And then you got another low right here. And that low is lower than the previous low. So again, lower highs, lower lows, and a series of those, that becomes our downtrend. Okay, that becomes our downtrend. Now, a sideways trend. You can see here, we kind of got to bracket it off here. We have, a series of highs up there, a series of lows right here. And you can see they're kind of similar in height, or similar in lows. All right, so you don't have really a defined direction of one way, or they're not making higher highs, they're not making lower lows, they're making similar highs and similar lows. And that's kind of the definition of our sideways trend. So when you go in, what you want to do is understand that that is how we're making our direction, our decisions, and based on this. And the reason we get into the trend direction is it's very important to understand what our trend is, so we can also continue on with, okay, when it comes to candlesticks and candlestick patterns and pricing patterns. One of the first things that we're going to ask is, what is the trend? What is the trend going into the pattern? So you need to be able to identify these. All right. And probably more importantly is if you want to get on the right bus. So if you want to buy a stock, we're all in here to hopefully understand how to trade a little bit better. And the idea is to make money. Okay. And if you can't understand the trend, I think one of the things that Scott and I hear a lot in class from traders is, I got on this trade and it's not doing what I want. And one of the first things we'll ask them a lot of times is, well, what was the trend when you got into the trade? And then we hear, well, you get those excuses coming in. All right. So ask yourself, as a trader, when you get into a trade, or you're about to get into a trade, what is the direction of the trend? Right? Scott, I see you coming in. What do
Yeah.
you?
I don't mean to throw a curveball at you here, Ray, but just real quick, there's been enough people ask, and Brett cannot keep up with answering them we warned you in the chat box, but just so you know, gang, these will be and are being recorded. So they will
Oh,
be available later. We'll make those available to you. Later on, we'll share with you the link. Brett's already shared it a few times, etc. So
yeah.
I just know that, Ray, if I'm sitting in their shoes, news, and I'm trying to get all this, and because there's a lot coming, I'm
Yeah.
trying to get all this, knowing that I don't have to memorize everything while you're speaking it, and that I can come back to it in a recording. That's going to cause me a lot of confidence and be able to
Oh
let
yeah.
me
And
settle in and relax and listen to you better. So I
yeah.
just needed
And
to make that. I just needed to make that point.
well, I'm glad you did. And I'm trying to go as slow as possible to get this in so that it's not jumping around on you.
Oh, no, you're good. You're good. We
All
just
right,
needed to
cool.
point that out. Thank
All
you.
right. Now, I did see something that I want to get into, and I'm glad they asked. Well, I heard of what is the time frame that we use on these things, right? And so I'm glad you asked because that is what we're doing next, and that is time frame. All right, let's look at that. All right, come on. Why am I not? There we go. So let's look at this chart here. We got a fictitious chart going up here, and we got a 6 month view. And there are three basic rules of time, okay, that we use. There's a long-term trend, an intermediate term trend, and a short-term trend, okay? Long-term, intermediate, and short, okay? So let's look at the long-term trend. A long-term trend, all right, is a trend that's in a time frame that we say is between months to years. How's that for narrowing it down for you, huh? Months to years, long-term trend. So what do we mean by a long-term trend? Why is that important? Well, not everybody is a trader that is in and out quickly. Sometimes traders like to get into a trade and hold on for a long time. They get dividends. All right. They like the long-term gains it's going to have in there. Maybe it's been a stock that's been in their family for years and years. All right. So depending on the kind of trader you are, there's nothing wrong with that. I mean, I bet you of all the people in class, there's hundreds or thousands of you that are long-term traders. Okay, you like to get in, you're in it for the long haul, so to speak. Nothing wrong with that. But you still might understand that, okay, even a long-term trend, can it go against you? And then may you want to decide to get out of that trade if your trend has changed. Okay. Now, within a long-term trend, you can have these things called intermediate time frames, all right, or intermediate term trend, and those are weeks to months. 2 month time frame, 3 month time frame, okay, 4 months time frame. But they're shorter in length, like the blue lines that are shown here in the middle of the chart. Okay, and so here, even in a long-term uptrend, you had a time when the stock kind of went sideways. All right, and then you could even have a short-term trend. All right, short-term trends, swing traders, trend traders, can be those time frames are from days to weeks in time, and you can see you can have those at the same time. Typically, we talk about those when it comes to the more recent time frame for making decisions, so to speak. But here's the great thing about time when it comes to the trend: it transcends all different time frames. All right. So for example, you can be in a minute chart. All right. You can be a 5 day, 5 minute chart. So really short time frames, but it still means the same thing. You might want to go, you can use long-term trends, intermediate, short term, but you can all still use the same information it's given you based on that time frame. So if you have a 5 day chart, for example, and you drew the length for the 5 days, it could be a 5 day uptrend. But the more recent 5 minutes may be a short-term trend to the downside. Okay. So you can transcend the time frame. You don't have to be locked in there. Now, but it is good, and I think you'll see this as we go through the week, as Scott and I look at examples, is sometimes when you look into a chart and you look at a shorter term time frame, a lot of times it's best to look left before you go right. Go back in time, look at a longer period of time to find out some of those things like, well, what is it? Is it in a longer term trend? And when Scott gets up here, he's going to talk about support and resistance. Is it near a level of resistance or support? All those things come into play. So again, let's go back to the definitions one more time. Long-term trend, months to years. Intermediate term trend, weeks to months. Short-term trend, days to weeks. Days to weeks. All right. And then there's one last slide. This kind of goes you and shows you kind of how does it change out? Supply and demand. Okay. A lot of you have been through economics. You understand how, when you get into if there's a great need, all right, great demand for something, and there's that demand goes on there, it can drive up the prices, right? So because prices can drive up prices. You get a higher demand and your price is coming up. Then you get to that equilibrium where demand's not as great, supply is equaling what you have in that demand equilibrium, and then you have more supply than demand, and that's going to drive the prices down. Okay, so that's when you hear a lot of times traders talk about that, or in our classes about supply and demand. Now you kind of know what we're talking about. High demand, prices are going to be coming up. Higher supply, prices may be coming down. All right. And where does this come from a lot? Institutional buyers. Yeah. A lot of that is institutional buyers, depending on the type of volume that's in there. Sometimes it might just be, if it's lower volume, it might be just retail traders. So you got to be careful of that and watch your volume that's coming into that. All right. Enough of the slides. Let's get in here and let's do this. Let's go live. All right. Now, what would you say, all right, when it comes to being a trader? Are you more of a are you more bullish? You think is the market more bullish? Is it more bearish? Why do people buy stocks, right? Why do people even do this? Why are you even in class? Hopefully to buy a stock, and you want the stock to go which way? You want to be in the northbound bus. You want it to go up. All right. The idea is to make money, buy low, sell high, right? And so, as a whole, I would venture to say the market is more bullish than bearish, and we can kind of show that. As a matter of fact, let's go up here on our charts tab and let's type in SPX, all right, the S&P 500, and here's the chart for 1 year, all right. But let's go back real quick and just show us, and why companies do this. They're mostly in it for making money. A company wants to make money. They want to do well. Vice some nefarious things that may go on, who knows, but that is the whole idea, right? And I've seen a lot of bullish things in there. Very good. All right, so let's do this. I'm going to go up to my time frame. All right, and I'm going to go to max. All right, max amount of time that the SPX is available in monthly candles. All right, monthly time frames on price. And if I do that, look here, folks. What would you say is the trend overall? So this is from about 19, what is that? This is January 1st of 1928. All right. So if I was to draw a trend line, oh, wrong line. I got it on price level. If I was to draw a trend line, all right, from here to where we are right now, when you say the S&P 500, it's kind of up, right? Now, back to what we talked about before. Have there been times when, it's gone sideways? Yeah, right back through here. You got a little sideways action going on right through here. All right. Other times you had, in relative terms to from 1928, were there times when it did go down? Shorter term time frame, yeah. All right. So yeah, it is. So right now, we're up here. If I was to zoom in, all right, we could zoom in. What would you say the more short term? This is from 2017 to right now. We're kind of in a what? Kind of in an uptrend, are we not? All right. So it's a good way to go back and just practice your skills on looking at some of these. Now, again, remember we said if you want to get rid of the lines, you can right click. We can remove all the drawings so you can unclutter what we just did in here. So we'll do that real fast just to make it clean for you. All right. So this is an idea of the whole time frame out there. All right, let's go back up here to our time frame. Let's go back to our 1 year day chart. And let's just look at some of those. So we saw the Dow. Here's the S&P. If we go up here, we go, yeah, long term, we're up. All right. What would you say the kind of the intermediate time frame was kind of going sideways right through here, and then it kind of pulled back. All right. Little intermediate downtrend. And then we're what? What are we short term for? Let's say the last 2 weeks. What's our short term trend last 2 weeks of the S&P 500? Definitely up. Okay, definitely up. All right. So, when you start seeing these, you got to go, man, how can you see it so fast? All right. Well, it's many years of doing what we're doing. So I would suggest to all of you traders, do this. Go back, pull the different indices up, and just draw the lines into them. So let's go RUT. All right. The Russell. All right. Got the Russell. Did the same thing long term. Remember, months to years. All right. Long term, we got a long term uptrend. All right. We have an intermediate term. Where are we at? We kind of went down a little bit. It's back up. So intermediate term, up, short term, up. Can you all see that? Yes. All right. Let's do this though. How about if we do, let's do one more of these. And matter of fact, this might be a good rule to follow. Just look at the indices when you first start your day. All right. And just get a feel for what's going on with the different indices. So in this one, long term, what do we got? NDX up. Okay, kind of went sideways for a while through here, yes. And then we have an uptrend. All right, short term, again, intermediate uptrend. All right, so we're manually drawing these things in, okay? Let's look at some different stocks to practice with as we get going through here. All right, let's look at J&J. And let's look at J&J. Now, J&J, some people are going, wait a minute. I don't know if it's up, if it's going down, if it's sideways. Well, let's go through the rules again. Let's look at what is it for the long term. All right, 1 year. All right, if we go over here from where we started from the year and we go from where we are right now, it's in an uptrend. Yes. All right. If we go an intermediate time frame from where it was back in February, all right, a couple of months ago to where it is now, it's actually down. And then short term, it's actually what? Down, right? So you go, well, man, what do I do now? Well, let's think about this. Let's say you were a trader of J&J and you wanted to be on the northbound bus. You wanted to go up, okay? Well, right now, is it going up short term or intermediate? No, it's not, all right? It's actually down. So maybe this is one of those you look at and you go, well, but I really want to get in. Well, if you really want to get in, you can, but are you putting yourself in a situation where maybe it's not the right direction right now because it's going where currently? All right. It is in a downtrend. So in this case, you're on the southbound bus and you want it to go north. Well, how long are you going to stay in the southbound bus until it goes north? Right. Or if you were already on the bus and it turns south on you, how long are you going to stay on that bus until it turns around again? Okay, so that's where the trend identification and what Scott's going to help you out with support and resistance is going to help make some of these decisions. Okay, now let's look at time wise. Let's look at a couple of this one's going kind of down. Okay, and so we'll see if that's going to help you any. How about this one, OTIS? That's Otis Elevator. It goes up and down all the time, right? Ah, couldn't help myself. All right. So in this case, what we got? We got downtrend, yes. Okay. And then what's our intermediate? Downtrend, yes. And then our short term is what? Downtrend, yes. Okay. So all those lines, they come in. All right. Do the examples, draw it out, write the lines in. Okay. How about this one? How about MSTR? All right. What do you think that one's doing? All right. Let's do long term. Downtrend. Okay. Wow. Look at this. How about intermediate though? How about our intermediate term trend? It's kind of going sideways, right? And then look at our short term trend. All right. So for a couple of weeks, it's actually kind of going up. Except for our last week or so, we did have a small downtrend happen this last week, right? So kind of turning into a price pattern that we'll talk about later in the week. Okay, but kind of interesting here. You go, man, what do we do now, right? What do we do now? Okay, so, well, what we do is we kind of have to watch the price pattern because price is king. Now, this little pattern right here, all right, is called a flag pattern coming up. And then it broke some very specific areas that Scott's going to help you with. So there's something to watch on that. But overall, what is it doing overall, though, folks? Again, a downtrend. Okay. And then so let's look one more, look at a sideways trend. And then I'm going to show you some tools that are on the chart or on the platform that maybe can help you with identifying the trend a little bit easier if you have a hard time looking at a stock and going, man, what's it doing? What's it doing? All right, let's look at, how about this one? How about Crocs, the little rubber shoes? You've seen the little rubber shoes before. All right, so in this case, what is Crocs? How has it been going? Look at the long term. All right, kind of this dead straight, would you say? All right, kind of almost looks like the drawing that was on that chart, wasn't it? Okay, just right, just can't make a decision what it wants to do. Kind of started making a decision here, though. Maybe later on in the week we'll come back to this one to see how it's rolling. Okay, but yeah, kind of going the same way. All right, so you want to check those kind of things out and draw the lines in. Now, some of you may have a hard time drawing in lines and figuring how to work this. Let's show you a couple ways to do it. First, let's show you this thing called a Williams fractal. It's a price pattern. So we're going to go up here. Matter of fact, I'm going to go back to my pointer. Let's go up here to the price patterns, this upper right corner, go to patterns, and we're going to click show patterns. And now we're going to select a pattern. You can see it's already in there, Williams fractal. All right, it's a candlestick pattern. All right, so I'm going to get rid of it first so you see what it looks like without it. All right, there it is. All right, regular chart. I'm going to go to patterns. I'm going to go to show patterns. And then I'm going to select a pattern. I'm going to go to what's called candlestick. Candlestick. All right. Pop that in there and then start typing in Williams. All right. And there it is. I'm going to double click on it. Goes over to the candlestick pattern. All right. Or price pattern, what's going to be called. And then I'm going to hit apply and OK. And look at these little carrots it made. So if you have a hard time identifying, you can just draw lines through the carrots and it kind of tells you what's going on. All right, so right through here. If I draw a line, let's go trend line, and I draw a line through these carrots right there. There's that intermediate upturn we talked about. Had made a carrot here, but we know that's a downtrend short term. And then if it's a hard time drawing sideways, you can draw through the majority of the carrots going sideways. Kind of gives you an idea where they are, right? So definitely can use Williams fractal. Let's look at another stock. Let's look at NVDA. All right. So if we didn't know that, look at here. Can we do the same thing here? Can we draw right through our carrots of what's going on through the majority of them there? And you can kind of get an idea now of, okay, what is my trend for those time frames? Okay. Is that kind of helpful to you guys? All right. Then you can see this, if we go here to our little shorter term intermediate time frame, up or down. Okay. Williams fractals is called. Let's look at another one. Let's look at CAT. All right, look at this. If you couldn't tell that was an uptrend, could you draw right through those majority of those yellow ones right there, and you can see a longer term uptrend? Yes. Okay. So if you have a hard time identifying, that's one way of doing it. Now let's do one more thing that can help you with identifying trends. All right, let's go here. Let's remove clear all the drawings. Okay. Yes. All right. Let's get rid of the patterns. All right. Now then, a couple of ways to do this. Now we talked about using time frames for identifying trend, and then I'm going to give it to Scott Durfee. So Scott, get ready, my friend. I'm going to go to this Urmila flask right here. I'm going to open that up, and this is the Edit Studies page. Now over here, I'm going to go in here and write, all right, click on that box, and I'm going to start simple, S-I-M-P, for simple moving average, okay? And we're going to get into these later on when we get to studies tomorrow, but I want to show you quickly how we can do this. We're going to add 3, I'm going to double click again, and again, and we're going to put 3 moving averages on this chart, okay? Now to change a moving average, I go to the gear. I'm going to hit a gear right there. I'm going to change this to 200 because 200 is about 1 year's of time frame on a day chart. Okay. I'm going to make that a little bit fatter, and I'm going to make this a gold color. All right. And then I'm going to set OK. Then I'm going to go with my next one, and I'm going to open the gear, and I'm going to make this a 50-day. Okay. 50-day, or in this case, 50 period, but it's a day chart. All right. So it's called 50 days. I'm going to make that again 3. And then I'm going to change this one to a green, and I'm going to put OK. And then I'm going to change this bottom one to a 10-day or 10 period. And again, these transcends. If you change your time frames, they'll change with it. And I'm going to make this also a little fatter. And I'm going to make this one red. All right. And okay. So I changed all my moving averages. All right, a 200, a 50, and a 10. All right, and then I'm going to hit apply, hit OK. And now look here, folks. So the red line is our short-term trend. Which way is it going? Remember, that's the 10-day moving average. It's going up. Our green line is our 50-day or intermediate. It tells you it's going which way. It's going up. And our 200-day, all right, or our long-term, this is going up, okay? And yes, these are recorded, folks. These are recorded, okay? Now, it's not the same as the MACD, and we'll get into MACD tomorrow when we do studies. But you can see now you have a moving average that can help you identify the trend. So if you go over here and you change up to, let's say, A, B, and B, all right, Airbnb, okay, all right. Whoops, I got the wrong one. Sorry, A, B, and B. Can't type. All right, now if you couldn't tell, that thing's all over the place, right? But if you had the moving averages in there, and I can zoom in, stop that. Sorry, folks. There we go. And I want to zoom in. Okay. Now then, so if you look at this closely now, and we go, okay, what is our short-term trend? Up. What is our intermediate trend? Up. And our long-term trend's kind of going sideways. Okay. And you're right, smoking quartz. It is pretty basic. And that's why we started with the basic things. And I'm glad you picked that out, because I want everybody to understand this is the basic understanding of, if you don't get this down, you're going to have a hard time later on, because you got to understand the trends and where it's going. So thanks for picking that out. It is very true. Okay. And I'm so happy we're able to do this. All right. So in this case, if you have all the directions in your favor and you're saying, you know what, this is one that I wanted to trade. I don't know if y'all know this or not, but you can do this right here. You can go right onto the chart. You can right click. Okay. And you can buy. All right. For example, let's say we wanted to buy this. We could buy this right now by clicking buy. The order comes up. Okay. And you can edit the order. So you can decide if you want to add more shares to this, if you want to do a limit order, and we're going to get into these later in the week. But I just want to show you how easy it is. You can come in to say, I want to do a trade here. All right. And if that's the one you want to buy, you can confirm and send. Always read your order. I want to buy 100 of Airbnb at 140 limit and send it off. And there you go. That's how fast you can do it. Now, kind of quick, I know, but I want to be able to show you that you have the abilities, the tools to go back and do this. Okay. So a couple of things you can do real fast before we get going and getting over to Scott is this right here. This bit.ly link, or you can shoot this QR code real fast, and you can set up a walkthrough, all right, with thinkorswim and the experts on the trade solutions team about your platform itself. So take full advantage of this. All right, there's the bit link in the bottom if you can't do a QR code. And take advantage of this. We'll drop it into the chats as well, okay? But this is going to be very helpful to you when it comes to getting yourself started on the platform and doing a lot of things we just did here just now this morning or this afternoon. Now, some things coming up real fast is this right here. We got the market drive in Chicago, May 16th. All right. It's a one-day event. Get out there if you can. Technical analysis and option strategies. There we go. All right. We're going to be live, San Diego, teaching this live. Scott, myself, and Ben Watson and other members of the team. If you can get out there, you can register right up there at schwab.com/coaching. Go to live events and get registered. And then we're going to be in Chicago, Illinois again in July for this same class, technicals and options. All right. Scott Durfee, 4-minute over. Sorry, my friend.
Oh, you're fine.
Can
you hear me okay?
I can hear you fine.
Okay, good. I hope you didn't hear me just cuss when I dropped my drink right there. But,
I'm going to stop sharing, so it's all yours, my friend.
All right, I appreciate it. Let me take that over right here. I'm going to share, and I'm actually going to share the screen that's in front of me, and I'm going to come right here.
All right.
And
Scott, folks are asking about other cities. When you go to the Schwab coaching live events, you'll see the other events going. Those are just the first 3 coming up. But yeah, we're going to be going to New York and other places. Just go to the site there, and you can see where we're going.
Yeah, very, very great. Thanks, Ray. Great stuff coming up here. We hope that we know that we see a lot of you, and we'd like to see more of you. So please join us in these events that are coming up. If we're near you, great. If we're not, it's worth the travel. In fact, I'm sure there will be plenty that will testify to that in the chat box right now. So, hey, thanks, Ray.
Got it, buddy.
You can go ahead and go off camera if you want, or you can
I can't.
stay. It's up. It's up to you, bro.
Yeah.
Yeah, it's just different with these. Okay, so gang, we're going to come over here before we roll into the slide deck and start talking about the topic I want to talk to you about. There's a couple of things that I think that if we just take care of right now, it will kind of decrease our learning curve. It might make it just a little bit easier for us to focus on the content at hand and to maybe, just maybe, be able to kind of follow a little better. So, in order to do that, there's a couple of things that I want to point out. One is that going back to what Ray showed us right here just a few minutes ago, this is invaluable. And every question, I mean, every single question that you'll ever have to ask about the thinkorswim platform, not just the functionality around it, but how to make it better for you, because we're all a little bit different in our approach, etc. This is something that you should take advantage of. And if you don't, you're missing out, especially for those of you who feel like maybe I don't have a great handle on the thinkorswim platform. One of the things that I like to do when we're in a live event is I will ask how many of you are super comfortable with the thinkorswim platform, and I'll ask you to raise your hands. In fact, I'm going to do that right now. Drop in the chat box if you're super comfortable with the thinkorswim platform. And if you're not dropping I'm 90% comfortable or maybe an 85% comfortable with the thinkorswim platform in the chat box right now, then this is for you. So please take advantage of it. So for those of you who want to know, this is something that you can do as a beginner and then repeat it several months later. So this isn't a one and done. You can't call every day. You can't schedule an appointment every day. There is a time limit, a time frame that needs to go between each one. And so thank you for responding. So to my point, this is a great opportunity for you. Now, I told you that I kind of want to help you understand just a couple of things that may make things just a little bit better for us. A couple of you, many actually, asked, how do I get rid of the volume bars? Many of you will find that by default, now you'll notice I'm in the chart tab here. I have this left sidebar open. I'm going to close the left sidebar just to give us a little more space. And to do that, I'm just going to go ahead and try to click on that. It's not happening. What I wonder if, okay, I need to go. I'm not sure why that's not letting me do it, right? Okay. Thanks for your patience, gang. I may have to come back to this. Let's see. I'm going to stop my share, actually. And then I'm just going to try sharing one more time. Thanks for your patience. Sorry, guys. Boom. It's not letting me do anything on this thinkorswim platform. Not letting me draw nothing. We
Hey,
tested
Scott,
this earlier.
if you can hear
Ray,
me,
can you share
share
your screen and then let me draw on it?
yeah.
Yeah. Unless you had another way to do it right there.
You just got to just close that drawing tool off.
It's down here. It's closed. Yeah, it's closed.
Okay, which one do you pull up?
I just want, are you sharing?
Yeah.
Share your screen. Okay. Just share your screen and I should be able to draw on your screen. If not, I'm just going to give you directions. Let's just do that. So Ray, go do me a favor. Go to the stock AAPL. And also do me a favor and let's go in and go to the big gear right in the middle. We're going to take these volume bars out that many people have on their account. So if you'll just click on that big gear right at the top, Ray, click on that. And then, gang, if you'll notice that if you come right here to equities where Ray's pointing, click on that, come down right below it, unclick the show volume subgraph. I'll give you a little more space there. For those of you who do want to add volume, you can add it as a study. Not going to get into that now, but we may later. So for those of you who want to remove it, there you go. The other thing that many of you were asking is how do I get that cool little toolbar that Ray has right there at the top of his account, his chart rather. So the way that you do that, very similarly, you go to the Ray, you're doing great at this. Thanks for ad hocing here with me. I really do appreciate it. And so what we're going to go do now is we're going to go to the General tab. Click on General. And then from there, we're going to go down to the very bottom right-hand corner where it says My Tools. We're going to go ahead and click on each chart. Okay. I'm going to go ahead and put that on each chart. Now, when you do that, you go ahead and hit apply. You always want to hit apply when you're done with these. So go ahead and hit apply. And once you've hit apply, hit OK. And now it'll show you that you have it. That pin will not be pinned. And so as you move your cursor away from the top of the chart, the toolbox may disappear. A lot of you will love that. It drives me nuts. I want it to be solid and have it there all the time. And so I'm simply going to hit that push pin and make it permanent. The way I change this is I follow that bar all the way to the far right. I hit the gear, I open it, and you can see here that I can add buttons, I can add studies, I can add drawings, I can add a myriad of things. So there you have it. Okay. All right. So gang, Ray, I'm going to have to come back and share because I want to share my slide deck here.
Yep.
Don't go away.
One thing, by the way, you won't be able to add studies if you don't have any studies. And
That's correct.
We're going to make studies tomorrow.
Study sets.
Yeah.
Yeah. Okay. You can add a study, but to have add a study set. Okay. So gang, we're going to talk now about support and resistance. Ray's done a great job. There's a couple of things that are very foundational when it comes to technical analysis. And Ray said it earlier. In fact, I saw it in the chat box as well, that, technical analysis is great, but it's not a crystal ball. It's not the Holy Grail, and all of these other things. In fact, it's a tool. And it's a discipline and it's a practice and it can be helpful, but again, it's not the all in all. The one thing I will tell you that a lot of traders and investors who are serious about this, and I know that you all are, otherwise you wouldn't be here tonight. A lot of traders and investors will use a combination of fundamental analysis, right, to know what to buy, and then they'll use technical analysis to know when to buy. Many of you know this about me. I teach my kids, my grandkids how to do this. And this is a true story that just yesterday, my 14-year-old grandson was over here and he said to me, Pa, I want you to take a look at some stocks. And he had a couple of stocks and he was talking about support and resistance. And I was helping him 14. I was helping him to identify levels of support and resistance. Well, his younger brother, 11, I think, was looking over my shoulder and just eating it up as well. This is really the foundation. We get support and resistance. We understand the relationship between price action, support and resistance, and trend, and it really puts us in a position to do better going forward with more confidence in everything that we do. So here's what we're going to be talking about when it comes to support and resistance tonight. Let's just identify, let's just define what they are. When we talk about support and resistance, we're talking about highs and lows, okay? Highs and lows inside of a trend. Support's an area of demand, okay? You've heard that. You've heard that when I'm in the stock market is a function of supply and demand, which is accurate. Okay, so how do I identify these levels of supply and demand, and what would I presuppose around levels of supply? What would I presuppose around levels of demand? And we're going to get into that and help us understand, first off, where to identify and how to identify these levels. And then second off, what are some of the actionable items that we can take around them? So resistance, that's an area of supply. Support, an area of demand. In other words, When we hit an area of demand, this is where traders will begin to buy. When I say demand, I mean the demand of the trader. The trader is typically, when we see levels of demand, that's exactly what that means. Now, when we see levels of supply, we're talking about oversupply. And so that will be at a top level. And this is where traders will sell. It'll go up to a certain price. At that price, they will sell off a little bit and you'll see it come down. It'll come down to a certain level. At that level, traders will say, I should come back in. Demand rises and it comes back up. These are creating levels of support and resistance. Now, support and resistance can be in any direction, up, down, I mean, not up, down, diagonal or sideways. It can be up or down for sure. It can be sideways too, but that's more relative to related to the trend. But when we're talking about support and resistance, horizontal or diagonal. Okay. I love this. I love to help maybe draw one more analogy around levels of support and resistance. Many of you have seen this. Wiley, I know you have. Maybe many others who are here tonight as well. But gang, I'm in the lower floor of my home. This is my office. This is my home office. And below me is nothing. I mean, this is the slab cement above me. I have a ceiling. And then on the other side of that ceiling, there's a floor. That floor is Deb's, my wife. That's her office. Okay. Now I have a ball in my hand, and this ball is a representation of price action. So price action, if I have price action, and this is the price of the stock, and as you can see, go up and go down, go up and go down, etc. But when it hits the floor, it'll tend to bounce. I'm using the desk. Okay, so maybe I have another level of support here, the desk. So as I drop it on the desk, it's going to bounce. Now, if I bounced it hard enough, and I'm not going to do this because I did it last time and I ended up breaking a glass thing over here on my.
Do it. Do it.
No, I'm not
Do
going to do
it.
it, Ray. You were there. But if I were to bounce it hard enough and it were to go up, it would hit the ceiling. What would it presumably do if it hit the ceiling? It would come back down, right? It would bounce back down. And what would it presumably do when it hit the floor? It would bounce back up now, or the desk, because this will be better. It would bounce back up. Now, could it go through the ceiling? Yes. What would cause it to go through the ceiling? Momentum, force, right? Could it come down and go hard enough to go through the top of my desk? Yes. What would cause it to do that? Momentum, force, right? And so these are the kinds of things that we need to be aware of. Now, if it did go through the ceiling, momentum, force, if it did go through the ceiling, it might, just might, find a new floor. Oh, Deb's office, a new floor, a new level of support. So what am I saying then? Is an old resistance, because the ceiling was resistance, becomes often, not every time, and there's never a absolute on any of this. We are just looking at what the expectation will be. But the expectation will be that if it goes through resistance, then resistance becomes support. If it goes through support, then support can now become new resistance. And it's important for us to remember that as we go. All right, Ray, am I sharing? I am sharing.
Yes.
Okay, so can you see my chart now?
Yes.
I can't do anything. This thing is frozen. Okay, I'm going to have you bring yours up again,
Okay.
if you don't mind. And by doing this, I'm going to stop sharing so you can share. And what we're going to do, Ray, is I'm just going to have you pull up your chart. And we are going to do a whole bunch of stuff in the wild, identifying, when I say in the wild, Ben, Ben, y'all know Ben, of course. He loves to talk about going out into the wild like they used to on Wild Animal Kingdom. For those of you who can remember that. All right, Ray, are you
Hey,
sharing your thinkorswim platform?
I am now. It wouldn't
There
let
we
me
go.
get
You have it. Okay. Will you do me a favor? Can you reduce the number of uh, blank bars you have on your right to like 10?
No, I don't
Come
like
on,
doing
man.
ten.
We're not doing trend right now.
Man. All
Yeah.
right. So back to show y'all again how to do
Yep.
that.
Yep.
We're
Yep.
gonna go to
Yep.
time frame,
Yep.
expansion area, and we're gonna make it 10.
Yeah. This drives Ray crazy when I make him do this, but
There you go.
okay. Wonderful. Now, I'm going to have you put in some stocks, some ticker symbols, and just by chance, Ray, that's awesome. You have the first one I wanted to pull up. So, gang, now what we're looking at here is Apple. Maybe I can give you just a little bit of preview here. Uh, uh, we're going to talk about this in full detail I think tomorrow or the next day. But what you're seeing here, each one of these, we're going to call them candlesticks, Ray. Each one of these candlesticks that you see here, some of them are red, some of them are green. Um, the red ones are down days, the green ones are up days. Okay. All we're going to be worried about right now are levels of support and resistance. And so the down days and the up days will have some relevance here, but not as much as when we start talking about candlestick patterns. So Ray's going to go ahead and just draw in right there. He sees a floor. Great eye, Ray. So he's going to draw in a line right there. Now that's a horizontal line, obviously. And we're going to call that, I don't know, you tell me, is that support or resistance, gang? Is that support or resistance? And right, that's obviously support, which is this is awesome. Right now, do me a favor, Ray, from about that bottom red candle, far right, not the one with the long, not the one with the long wick, but the one that's touching the yellow line forward to the left of the long wick, right there. Start drawing a line from there. No, one more over. Yep. Start drawing a line from there and just follow the bottom of most of those candles all the way up, leaving out today's candle. Leaving out today's candle. Maybe move it even a little more to the left, Ray. Perfect. Okay, that's fine. So, gang, we have seen now a level of horizontal support. Now we also see that in a more short-term time frame, we see that Apple is now has been in an upward trend and has been bouncing off of a diagonal level of support, pretty steep one. But look what's happened, Ray. If you can just zoom in on the last 10 days or so of that guy for me. Now, you notice when Ray zoomed in, he's using the pointer, he's clicking, he's dragging, and then he lets go, and that gives us a zoom on whatever time frame we're trying to look at here. Now, again, you'll see, and Ray, if you can just kind of point it out, you'll see that as we have bounced off of this level of support, it came down and it's done what we've expected it to do. When we see price hit support, what do we expect? We expect it to bounce and go up. When we see price hit a level of resistance, what do we expect it to do? We expect it to bounce off the ceiling and come down. Deb's floor, my ceiling, my desk, my floor, etc. Right? So you can see that this has also been hitting, thank you, Ray, a level of resistance as it's been going up. So we've been moving up. If we got in this trade somewhere down here, and there was good reason for us to, actually, if you'll see right where Ray began drawing that, we have that bounce off of support. We have that big green candle the next day. That's a momentum candle because it's big. We're going to talk about those in a couple of days, if not tomorrow. And then that could have been many traders and investors may have seen that as an entry signal. Had they done so, they may have taking a certain target of an old resistance level. So Ray, do me a favor, draw in a horizontal resistance level at about 275.
275?
Yep, roughly. Down, yep, right along there. Yep. Yeah, maybe even the top of that green or whatever, right in there. It doesn't have to be 275. I just want to show that actually, I'm glad that we accidentally had that discussion. So before I point this out, I'm going to tell you this. When we're talking about levels of support and resistance, I don't want the fact that I use a rigid ceiling and a hardwood desktop. I don't want that to fool you. I wish I had trampoline stuff, that it was more movable, because that's really what support and resistance is. It's not a hard, fast spot. It's an area. And so if you think of it maybe more like a trampoline that comes in and there's some give in that, and we still do expect it to bounce up, but there is some give. And same with the top. So remember that. It's important for us to remember that. Ray, do you want to zoom out for me? Let's just go ahead and zoom out to the 1 year, 1 day chart. And you can see that you could extend that if you would for me, please, to the left. Yeah, that line there. Now you're going to see, gang, one of the things that you'll hear us often say when it comes to identifying levels of support and resistance, one thing that you will hear us often say is that we will encourage you to look left to confirm right. To look left to confirm right. Why? Because old levels of support and resistance will become again often, not always, but can become again the same types of levels of support and resistance. And you're seeing that here. You're seeing that for whatever reason, since the beginning of that channel, that yellow line that Ray has there, I can't see the dates below, but you can see that from the beginning of that and through now, that ceiling has held pretty true. We did get we did get a break through that ceiling momentarily. But you can see that it came down, that old resistance, the one that Ray drew in there for us, did not act, it did not hold as a level of support. And it went down, found the old level of support. Now it's using that as a level of resistance. So we'll see what happens. We have a break in a level of resistance with Apple with today's candle. The candle is below and closed below that level of support. So would that potentially be a signal or a sell signal? Potentially it could be for some, or maybe a move up my stop. Potentially for some, it could. But these are the kinds of things I want you to start thinking about. Okay, what's my application around this technical analysis stuff, especially when it comes to levels of support and resistance? I could spend all day talking about this one on Apple, but Ray, let's go to this another ticker symbol, if you don't mind. Will you put in U? Just ticker symbol U.
That
No, 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 no. You're being funny. Okay. All right. So, Ray, go ahead and just start drawing in levels of support and resistance. Now, gang, one of the things that I'm going to invite you to do um, is I want you to open a watch list tonight or tomorrow, and I want you to just go through, pick any watch list, do the S&P 100, 500, whatever it is. Maybe you have your own, but please do a watch list and go in there and identify the trend, short, medium, long-term trends, and then look for levels of support and resistance within those trends and draw them yourself. I think that you'll find that activity to be a great activity. And one of the things that you see Ray doing here as he's drawing in these levels of support and resistance is he's kind of starting at the extremes. He's starting at the extreme bottom. He's coming up and finding, okay, where did I get a bunch of touches? And so he draws one in at 2664. And then he comes back up and he sees, oh, here's a ceiling and a floor. And that goes in right around 35. And then he goes up and sees another ceiling and a floor. Ray, you did a great job, man, even on those diagonals right there. And so, gang, you'll see. Now, let's do this. Let's go down to the very bottom where it traded at about 1662. Let's go over to that final red candle down there, Ray. Right there. Yeah. Now, as we see a stock, again, okay, how do we use technical analysis? As we see it, and how do we use support and resistance? Remember, what do I expect to happen when the stock comes down and hits a level of support? What do I expect to happen? Right. I expect it to bounce and go up. So that's what we saw happen there. Now it came down, hit that level of support. How do we know it was support? Well, it was support before it was this, before back in where you'll see the bubble where it says low 1678. Well, that was a level of support. Remember, it's a big area, maybe a 4-inch paintbrush instead of a fine line Bic pen. But you can see that when we got down there, it did indeed bounce. And so it hit support the next day, it opened quite a bit higher. And I wish I could tell the story behind that candle. Maybe I'll write this down because when we do candlesticks, I'll try and remember to do that one because that's a fun story right there. But it comes up and it gives us a signal. It closed above the high of that low day. And when we open it, that would give a buyer or a trader potentially an opportunity to buy. Okay, so we come in and now you'll see that it's developing a level of resistance. I'm putting my cursor on there like you can see it, but a level of that diagonal resistance, and it's bumping against it. And it has a level of diagonal support and it's bumping against it. And it's also converging. This is really interesting, Ray, because we have yet another level of resistance coming into play here Right above, Ray. Yeah, even and that's awesome too. But as we can see, the one that's already been drawn in at about $37, you can see that today's candlestick is approaching it. So what do we expect to happen when we hit a level of resistance? We
Hey, hey
expect
Scott, real quick, I'm gonna do something real fast because I got this is gonna be tomorrow's class, but I'm using what's called candle trend.
yeah, we just
Most of y'all are on
okay, thank
basic
you.
candles,
Yeah.
so this will make it
Okay.
easier for you.
That'll help us. Thanks, Ray. So what's happening is it's bouncing up against that level of resistance. What do we expect to happen if it hits the level of resistance? We expect it to bounce and come back down. But what if it does something different? What if it does something else? What if it breaks resistance? That's actionable. And we need to keep that. It pays. We don't need to do anything, but it's helpful for us to keep that in mind as we keep going forward because these are opportunities for us. Now, Ray, point this out for me at the bottom right hand of that chart. I see a red phone and a blue light circle light bulb. Gang, these are events. And so you can see that on the 7th of May, that there's going to be an earnings conference call for this stock, the stock's Unity for this stock. This is the stock that my grandson brought me, by the way. But this is going to be having a conference call, an earnings call on that day. Do earnings calls sometimes create some action on the stock? There's no question that they sometimes do and can. So it's always important for us to know that those things are coming up. All right, Ray, do me another one. Let's go to NVIDIA. Okay, you've already got them drawn in. Look at that.
Well, those were when we were trying to show trend with
Yeah,
the with Williams fractals. So when we did Williams fractal, that's where those lines came from. The Williams fractals going through it, and it identified resistance and support levels too.
it does. Yeah. And that's one thing that I was just getting ready to point out. So far, we've been identifying levels of support and resistance manually. Literally my favorite way. It's okay if there are some tools that we can use, etc., but I trust my eye better. And you will eventually too, I think. And maybe you already do. I hope you do. So as we're looking here at NVIDIA, there's a couple of things that we can do, and we should, go in and just by eyeball draw in these levels of support and resistance. In fact, Ray, let's not do that on this one. Let's do that. Let's do this. Let's identify a couple of ways to potentially mechanically identify levels of support and resistance. So Ray, if you'll do me a favor, go into studies and let's put in a 30-day simple moving average.
All right.
And then let's put in a 10-day simple moving average.
All right. So I put two simple moving averages in,
Yep. Thank you.
and I'm gonna customize them by going to the gear. All right. And I'll make you said a 10.
Yep. 10.
What
And if
color do
you
you
want to
want?
make that red, please make it red.
You want a little fatter?
Yeah. Yeah. As fat as you can go.
All right.
That's
Three.
three's fine. Three's fine. Three's fine. Okay. And then let's do a 50. I mean, a 30. And let's make it green. Wait. Yeah. I have
Good.
those backwards. I usually like the 10 green and the 30 red.
We
So
can change them.
okay, let's do it.
10 green.
Yeah, 10 green, 30 red. Okay. Okay, so what we're using here now, we're using simple moving averages. If you want to use exponential moving averages, I'm fine with that. Whatever. We're just with this moving average trying to identify, again, a few things. Trend, obviously, we can identify levels of trend depending on the trend that we're looking at, short, medium, long-term trend, etc. We can use these things, but you'll notice, and this is a phenomenal example of that, these moving averages, you'll notice that 10-day moving average, especially, and that would be more suitable potentially for a shorter term trade, potentially. But you can see that that level, that green line has pretty well acted as a level of support and resistance. You can see for that 10-day That's a 10-day or 10 period rather moving average. And it's literally a period. So if you had that on a minute chart, which these are still efficacious. So if you had this on a 1 minute chart, instead of, you'll notice Ray just pointed out, it's a 1 year, 1 day chart. If we did a 1 minute chart, go ahead. These now become a 1 minute or a 10 minute and a 30 minute moving average. So it's a period. It's the period, not the day. So let's go back to 1 day, Ray. And so you'll notice that this is a phenomenal tool as well to identify potentially identify levels of support and resistance. Now it doesn't get everything, and so you'll notice, Ray, if you'll do me a favor, right at about 199, that you'll see that there's a whole bunch of support going on right there. Yep. We just draw that line and extend it all the way to the left of that price. So you can see there. Yep. Yep. So there's a level of support. Even maybe right above that, we had a temporary level support that was just a small move. Yep, right there. Go ahead and draw that in, Ray. And even though, in fact, Ray, will you just zoom in on those for me? Even though you can see that those, as it broke that yellow line, as the price action came above that yellow line, it was looking for some direction. Look how those candles are all pretty much the same size. That'll mean more. I keep getting ahead of you, but that'll mean more tomorrow. But what that's showing to me is that it's trying to discover price. And then all of a sudden we see a momentum candle break and we get another confirmation that it broke today. So when we see these types of things happen above these levels, then we can sometimes see them as actionable. Okay. All right. So let's do, Ray, let's do maybe one or two more stocks. Let's look at TTWO, Take Two Interactive. And gang, as I'm showing you these tonight, if you want to place trades on these, please do it in your paper account. We're not here to give advice on stocks. We are just doing some technical analysis on some charts tonight. I will be making a couple of trades here in just a couple of minutes, but we're just going to be doing it in paper money, and we're only doing it based on our technical analysis. So please make sure that you do all your own due diligence, and remember, this is not a these are not recommendations. Ray, let's get rid of those moving averages. And then let's do another one. Now this next one that I'm going to show you is also, stay there, is also a study. So go into the studies and type in Darvas, DARVAS. Go ahead and click on that. Darvas box right there, buddy. Yep, click it, put it on, hit apply, hit OK. I mean, you'll see levels of support and resistance being drawn for you here as well. Not as fine-tuned. They're catching the big moves, etc. But sometimes that can be extremely helpful in helping to kind of hone it down. Ray, one more time, go to studies. I just want to make sure that they have it. Yep. So Ray is in add studies. So go ahead and type in Darvas box, and then he'll move it over, put it in, and that's how you add the Darvas box study there.
You just highlight it.
Yep.
And you can either add selected or double click.
Yep.
All right. And if you have too many of them in there, like we do now,
yep.
just hit the X.
Take one out. Away. Yeah. Very good. Okay. All right. So gang, let's just go off of this Darvas box move. Ray, are we to the far right?
I am.
Okay. All right. So what we have here, can you zoom in for me?
Right there.
Yeah, right there. That's great. You bet. All right, so look at the far right, gang. You can see what's happening here. We've got some bouncing off of this level of support. That level of support may not be exactly where I would have drawn it, may not be exactly where you would have drawn it, but it's within the vicinity, and we're going to be okay with that because we know the levels of support and resistance are areas, not to the penny spots. Okay, so what I have here is I have a bounce off of that level of support with a green candle, which is an up day off of that level of support. Some traders and investors will see that as an entry signal. We're going to go ahead and place a trade on that, Ray. So since this is your account, go ahead, go ahead and hit the trade tab.
You want to do the trade tab or do it off the chart?
Okay, let's do it off the chart. So when you're on the chart, you can just right click. You come down to where it says buy. We click on buy. We're going to see here. Now it's going to tell you the price that you're buying it at, and it has it as a limit. So look what we're doing here. We're buying. Ray has just kind of defaulted to 100 shares. So we're going to buy 100 shares of Take Two Interactive at 213.91 limit to open. Now this is a limit order. Okay. And this is probably going to be, this is a time and force, right? Day only, right? So if you wanted to edit any of that, go down and hit the edit box and you can change any of those parameters. Change that to 1,000 shares, right?
No.
I tried. Okay, so there you have it. Go ahead and hit confirm and send, and it'll give us that confirm box again. We'll read it. We read it out loud to make sure everything's accurate, and then we're going to go ahead and hit send. So there you go, Ray. Ray will be the proud new owner of if all things work. Now, if that pulls back, and this is the cool thing about a limit order, it will buy it at that price or better. So if it pulls back, it may get a little better price. Okay. So there you have it. That's a great way to do it with the Williams fractal. Let's do one more, Ray. I think we've got
I mean,
five.
Darvis box, not Williams fractal, Darvis box.
Did I say Williams fractal? That was what you show. Darvis box. Okay, let's look at it. Let's go ahead and take the Darvis box off. Let's go ahead and let's look at one more example. Let's look up VLO.
VLO?
Yep. Okay. Valero Energy. A lot of stuff been happening with energy. Been in the news, a lot of stuff in the news. So let's go ahead, start at the extreme, start at the very top and draw in a level of resistance, right there. Okay. Let's come down below it and let's draw in a level of support, maybe down at 219. Yep. Somewhere in there, maybe. Yep. Yep. Oh, this is a good one too. You'll notice for those of you who understand what candlesticks are before we teach them, there's wicks and there's bodies, and you're going to ask, does it have to have the wick, or does it have to have the body, or how much of the body, or how much of the wick in order for it to count as levels of support and resistance? This is where we come back into the trampoline idea. This is where we come back into the 4-inch paintbrush idea. Okay. So you can see Ray doing a great job here, drawing in levels of support and resistance for us. And this one that he's drawing in right now is really interesting because that was a gap up. And you notice that gap filled, right? They don't all fill. And that gap up, when we see those gaps up, sometimes that gap, or where that gap starts, that can begin as what we call S2, a new level of support, or can be even a new level of resistance. So wanted to point those things out to us as well. Ray, we've got a nice bounce off of support with VLO. We do, however, are bumping up against what could be a potential level of resistance right there on today. Yep. And we have an interesting candle that we'll talk about more as we go. So Ray, if you want to, let me take it back from you. I'm going to share my screen and just kind of wrap things up. Gang, we appreciate you being with us so much tonight. There's been so many great comments come through. We really appreciate the way that. Am I sharing?
No.
I forget it's a 2-button process here. We really appreciate you being here with us tonight and learning something new. Hopefully you have. Remember to take the survey. Click on that. Go ahead and get your camera out. I'll leave that for a second and just do that QR code and we'll be good to go. Oh, I was just going to call you back on, Ray. Thanks for joining back with us, Ray. Ray, great job tonight. I appreciate you helping us learn trend. Again, gang, tonight was foundational. And I know for some of you, it was, yeah, tell me about it, Scott, very foundational. And we get that. But for many of you, it was brand new. And we know that this was a benefit, and we're trying to help build your confidence in doing so. If you had an aha moment tonight, drop it in the chat box. If you had an aha moment tonight, don't forget to share it with us in the survey. Make sure you do share the survey, or make sure you do the survey. Again, it's right there. And remember that everything that we've done here tonight has been for educational purposes only. Ray, anything?
I just want to say again, I want to thank everybody. Hey, I want to thank Brett to be on the chats, keeping up everybody and helping out with all that. Remember again, tomorrow we're going to have candles and candlestick patterns and candlesticks and studies. All right. And so we'll be continuing on. We'll be using we learned today into tomorrow's class and so on and so on. And we hope you're picking a few things up. Yes, again, foundational, but that's the whole idea. This is the foundation. Trend, support, and resistance is the foundation for technical analysis.
And it's a lot of fun.
It is.
Don't forget that. Thanks for being with us, everybody. We'll see you tomorrow.
Same bat time,
same bat time, same bat channel. Take care, everybody. I forgot that.